Welcome to Venture with Grace.
Hi, great. Thank you so much for having me. It's really a privilege to be with you.
So I want to start off the show about a little bit about so I feel like the travel industry, especially with the help of AI, there's a lot of different changes. So why don't we start with your a little bit of your background on the travel side from Booking.com to founded your own unicorn travel company? What are some core lessons that you've learned in the travel industry prior to joining Alumni Ventures and starting your venture career?
Sure. Yeah. Thank you. So I've had sort of two competing professional interests my entire life. I've been working since the first dot-com wave in 2000, and I've always been interested in both tech and innovation and entrepreneurship, as well as the travel industry. So my first two jobs out of college were at Lycos, like the early kind of search engine portal, kind of pre-Google days. And then my second job out of college was doing route planning at America West Airlines. Two things that seem to have very little in common, except it made a lot of sense to me because ultimately I was kind of on a path to get into travel technology. So it took a few different stints in different organizations to eventually get there. But around 2012, I believe, I was living in Amsterdam. I had moved there, started working at McKinsey, doing airline and travel consulting, eventually got back into travel tech. I liked being part of the travel industry, but I also like being in an innovation-oriented environment. And over in Amsterdam, we happen to be headquarters of arguably the most successful online travel company that's ever existed, which is Booking.com, originally acquired by Priceline Group, but subsequently renamed as the Booking Group, since Booking is really what drives the revenue and the profitability of the whole enterprise. So I had a chance to work there in a couple different roles, doing some strategy projects, and then eventually helping them start a new kind of B2B division. And from there, I was kind of getting an entrepreneurial bug again, and partnered up with two of my colleagues, Avi and Javier, to start a company in Barcelona called TravelPerk. We were learning a lot about how consumers bought travel through Booking.com, but we were also learning about how businesses buy travel and kind of the problems that they encounter. And so we decided to create a platform that would address some of the challenges around booking for business in a way that was more user-friendly, that was cost-effective, that solved a lot of the issues that particularly SMBs were having when they book and manage business travel. So we started TravelPerk around 2015. I was there pretty early. I was the founding CEO, although I was only there for the first year or so. Helped us raise our seed funding round from a number of angel and VC investors, and went through sort of an early pivot where we sort of had to retool our business model a little bit, but then stepped out to come back to the States for family reasons, where I eventually turned to the investing side. But in terms of your question, travel it's a really interesting market. I think that it's something that billions of people will encounter at some point. They're booking business travel, personal travel, visiting friends and family, whatever it might be. Lots of different problems to solve. Very difficult to create a business model that scales and scales profitably. Booking is one of the exceptions that has really done it very well. And we think TravelPerk, I still say we, even though I'm kind of long removed from day-to-day operations, really saw a way of addressing business travel in a unique way and in a scalable way. So yeah, there's a lot of challenges to be solved, and I think kind of AI is kind of the next wave of that. How are we going to automate things even more and get more intelligent about doing business travel? So it was kind of a fun one for me to be involved with, and kind of bridged me over to coming back into the venture world.
Totally. I wonder, since you spent so many years in the travel area in general, or travel sector in general, how does the money flow in the industry? So I think I heard about this from other founders that so Booking.com's Google Ads largest clients. I heard this is public data, so I'm not saying
Yeah.
anything that's private.
No.
So I wonder, so how, since a lot of the money would be spending on advertising, and then now we're in the chat GPT era, as there's a lot of startups that I'm seeing are starting to create the one click travel booked for you kind of app. And what's your thought on these kind of new travel trends? And I would love to just hear from you that since you mentioned like travel, it's like a really unique area that doesn't necessarily make money beside maybe the top player like a booking.com. I wonder, how does the money flow in the industry in general?
Yeah, it's a great question. So as I review pitches, I see basically, I guess you could say, like three different models. There's, commission booking revenue. There's some kind of software pay for service, and then there's some kind of, community aspect to it. It kind of depends if you're talking about a B2B or a B2C kind of model, and how that all works together. There's a lot of like, is essentially it's a big chain of like affiliate revenue when it all comes down to it, because ultimately booking.com does not provide you cannot check into your booking.com hotel, you cannot buy your booking.com flight. They're a channel, and what they do is they basically connect directly with the hotels, with the airlines, with car rentals and trains and buses and whatever else. The challenge is that commissions are made in certain aspects of travel much more than others. So hotels pay big commissions. Generally, it's like between 15 and 25%. And that's because this is a very fractured industry. There's not a lot of, monopoly power. Whereas in airlines, you're kind of forced to book whatever airline has the seat at the time you want to go and the most reasonable fare, whatever combination of, general factors. But you don't have a lot of negotiation power with an airline. So airlines don't really pay much commissions. There are bits and pieces here and there, especially on premium tickets, but in general, they don't pay much. Hotels pay a lot. Cruises pay some. Car rentals pay some. It kind of depends. So there's a whole mix. But really, there's certain aspects of travel that pay more than others, and then you kind of may have to supplement that with additional fees. If you're providing additional fees, let's say you're selling to consumers or to businesses, a business travel booking. But the real money is flowing kind of, in bookings case from hotels, a 15, 20 or more % commission. And that adds up when you're doing thousands upon thousands of bookings every day. That's where the cash cow is. So the question is, well, why isn't everyone doing it? Well, everyone has kind of tried to do it. The challenge is to do it at scale and to be able to acquire users for less than the cost of converting them and then retaining them later on. Because it's hard to acquire a user. If you go to Google search and you're typing any kind of popular keywords that have to do with cruise or hotel in New York or, Caribbean cruise or, whatever it might be, there's a lot of competition. You're bidding against the major hotel brands, the Hiltons and the Marriotts, and everyone else that wants a piece of this. And then you also have layers. You have meta search that consolidates all the booking inventory. And there's, the kayaks and sky scanners of the world that consolidate inventory, and they all want a piece as well. And so it gets very competitive. But booking's been very data driven for many years and does incredible amounts of A/B testing to figure out, like, this magenta color works better than this, other color. And, the slightest little tweaks of where you put wording and the colors and the UI, has a lot to do with, how well you can convert. And so lots of little factors that have led booking to being, as successful as they are. And, they're not the only one, but they're the ones that have done it at the greatest scale. But for a startup, it can be really challenging to find your way in, because you're, if you can crack the code on getting, sort of your customer, whether it's ACV, LTV, whatever you're talking about, what kind of customer it is, to be higher than your cost of acquisition, then you've kind of cracked the nut. But that's not easy to do. It takes a lot of experimentation to get there and figure out how to do it at scale. So I hope that kind of addresses your question.
Totally. And then since like TravelPerk is focusing on like 2B audience, and then it started in Barcelona, Spain, and like I wonder, so how did, like, when you are looking at, for example, picking where to start? I know that you mentioned you were in the Netherlands previously, so I wonder, like, why do you choose like Barcelona, Spain as like a starting location? And I wonder, on the other end, like, so what's a major differences between like booking for like businesses versus like individual, in terms of, you mentioned about like, the commission between, these hotels or to like travel, assuming like marketing to businesses, it's more efficient as like it's one decision maker and then who will make the decision of the whole company versus like a million individuals that are picking this color over that color. Like
Yeah.
how, so I wonder how does it work differently when you're selling to the companies?
Yeah, I mean, clearly it's more of a sales cycle, right? That's why, enterprise SaaS is an efficient, scalable
Mhm.
market because one customer can be 10,000 users, and and it scales well as you get bigger customers and kind of adds on top of the platform. Whereas with individuals, yeah, you're kind of marketing to them one to one. I mean, Booking certainly gets a lot of business bookers as well, and they have since the time that I worked there with my co-founders. Initially, it was focused just on hotels. Now it's a little more broad, but we think TravelPerk has created a more tailored solution by we really went and talked to like lots and lots of customers about what their needs were and what would help solve those needs and how can we use technology to build something to them rather than developing on sort of an existing consumer platform, which has some limitations. So that's kind of how we went about it. I mean, being a little bit more removed, I'm not necessarily the best spokesman for what's the latest and greatest of what they're developing today, but the company is constantly innovating in terms of how to streamline the process and make it easier. I mean, even simple innovations like, could an office manager book on behalf of 20 employees and see all of their profiles? Like there actually weren't many tools then that could do that. And so we were just trying to think very pragmatically about what are the needs and how do we address them.
Totally. I wonder when it comes to fundraising. So I know that you mentioned about this on another podcast. Like when you left the company, there was like a big rush of the travel startups that are kind of like taking off. And I wonder, overall in the industry, I guess like um for now, I feel like travel is still like an area. It's kind of like the media. It's kind of like a huge winner take all kind of situation in the space. And I wonder, what's your thought process on like fundraising when you're fundraising for like a travel startup? And is there like a particular group of investor that particularly invest in this area, or do you feel like it's a more generalist approach, like all these big firms that are thinking this is like a good niche to basically like spread their bets?
Yeah, there certainly are investors, angels, VCs that do travel. There are a couple VCs that will really focus
Mhm,
on travel, but not too many of them. I could probably count them on one hand. But there
mhm,
are some, General Catalyst comes to mind, which has done a lot of travel over the years, but it's not like their sole focus or anything like that.
mhm,
So you have others like that. Others, Bessemer has been in, and we've seen other firms that kind of come in and out and develop a thesis. Sometimes it's a very narrow thesis within travel. Others, it's a broader, it's such a big addressable market that we think we should take a few shots on goal here. When we went about it, I was leading our seed fundraising, I think in 2015. We had 10 investors in our initial round, and it was a mix of people that some we knew personally, some were angels who liked the space, some were referred by other VCs that we had pitched, some were travel focused, others were not, but they liked our backgrounds. I mean, we as three founders coming out of Booking.com,
mhm,
because of the Booking reputation. I didn't mention that my co-founder Avi, who was initially our CTO and has been the CEO since I left, he had a company called Hotel Ninjas that he had sold to Booking. By the way, that's largely the reason why it's in Barcelona. His company, he was living in Barcelona where he had started Hotel Ninjas and then
mhm,
ultimately sold it to Booking, but didn't want to relocate. And so for us, it became a matter of should we move to Barcelona? And my other co-founder, Javier, was already packing his bags. He wanted to kind of move to Barcelona anyway. And I had lived in Madrid earlier in my life, so it wasn't a big stretch for me to go there. So that's kind of to answer your earlier question.
mhm.
Barcelona. Also, that it has a great startup ecosystem, particularly in travel, and it's kind of a lower cost base within Europe. It's generally more cost effective to hire software developers on the ground in Barcelona than it is in many other sort of tech hubs in Europe. So that kind of is sort of why all those pieces kind of came together for Barcelona. But yeah, I think it's really just for fundraising. there's no one right answer. You look at every startup, and it can be very hard to like draw the pieces together. But if you're just starting out and you're trying to find who likes travel, I mean, at least you can sort of figure out, who's invested in at least a couple travel deals. That's usually a good starting point. I mean, for us, I remember we talked to one VC firm that had invested quite a bit in travel, and we were too early for them, but they referred us to an angel investor that did participate. And so that was extremely helpful. So at least start the conversations early if you can.
Totally. Do you believe in the AI assistant for travel space, like the one click, they help you book the whole trip kind of situation? And like for that to happen, I guess what would make you put money in? Is that the unit economics of like how they acquire like lifetime customers, or how does it work on your like?
Yeah, I think you hit on the hottest question in travel tech and what investors and founders are thinking about. Like, how do we use this in ways that it's kind of never been done before? Because, it's kind of been a running joke in the industry. Like everyone's creating a trip planning app, and you've had hundreds, if not thousands, of them, and no one's arguably, other than maybe like a TripAdvisor, which has been around since the beginning of the .com era. You don't really have a lot of trip planning apps that have really hit it big, but can AI be the tool that allows us to do this in a more efficient way, where the AI is smart enough to know all of my micro interests? Like right now when I travel, I used to be a very big adventure traveler. I've been to over 140 countries, including some that most people would never think to go to. But today I've got small kids, and so we have much simpler travel needs. But yet it's complicated, because I need to think about, if I'm going somewhere, like they need to ride in car seats, and how do I figure that out without having to schlep car seats with me on the plane, and which is a big pain in the butt for any parent who knows about that. And there are always these like little details, and we might consider an Airbnb, but on the other hand, if we can get adjoining hotel rooms, that could work as well too. And so I have all these like different needs of things that might work or might not. Like if I could get an AI that really understood the way I thought and could show me that if I enter in like 25 different inputs of what I'm looking for when I'm booking a trip, and it will immediately send me exactly what I want. That would impress me. And I would be very open-minded to something like that. And if the company could make money in different ways, if it's just booking the travel and then taking their commission, great. If I have to pay a small fee, great. I'm personally an investor in a company called Point.me, which is for booking using your points. They find ways to use your points probably more effectively than you can on your own, because a point can be worth very different amounts of money depending on how cleverly you use them. And so they help you with that. Like that's something I'm willing to personally pay a fee for, because they're going to find me something that I couldn't find on my own, most likely. So if the AI is really proven to do something that is better than what I could do on my own, and can do it a lot faster, I'm going to pay for that. And if I see that, I will gladly consider investing.
I wonder, speaking of investing, so I know that you are managing partner at Alumni Ventures with the Harvard Yard Ventures in particular. And I wonder, so for the different funds, since Alumni Venture is kind of like a group of investors you use towards it, like Fidelity for venture, or
mutual fund family of venture capital in a way is something
I wonder, like, do you guys have to like individually fundraise from the individual LPs, or like how does it work from that end? Since like a lot of our listeners are like investors themselves, like curious, what's Alumni Ventures take on like the fundraising side of things?
Yeah, that's right. So we got started around 2014. Our founder and CEO, Mike Collins, who I know you interviewed last year, basically had the idea of democratizing venture capital. We think it's a very valuable asset class that has shown great performance and is a great opportunity for investors. It's available as an asset, as an alternative asset for any individual accredited investor, yet it hasn't traditionally been available. If you want to join one of the major Silicon Valley VCs, you usually need to write a check that could be multiple millions of dollars just to get in. We want to make the asset class available to many more investors. So our minimum is only $25,000. The different alumni funds market themselves to specific communities. So the Yard Ventures for the Harvard alumni community, but we also have Bascom Ventures for the University of Wisconsin community, and more than 20 others. It's really a way of bringing alumni together to invest with fellow alumni into the best venture deals that we can potentially get into. So yes, we work with over 10,000 individual accredited investors. We manage about 1.3 billion of investor dollars that they've committed to us, and it's spread across many different funds. So we have the 20 plus different university alumni funds, but we also have funds that are geared toward other interests in ventures. So we have an AI fund, a deep tech fund, a women's fund, a global fund, health tech fund. I personally lead our seed fund. So we're sector agnostic, but focused on pre-seed and seed investing. Very diversified portfolio. My team makes more than one new investment every single week on average. So very active pace of co-investment. We only co-invest. We're able to do that pace because we're not a lead. We're strictly a co-investor. So it's working with the individual investors who are looking to add true venture capital to their portfolio, and most importantly, get access to great deals. Because we co-invest alongside the big brand name VC funds, we help those individual investors get access to deals that they probably would not be able to get access to on their own. And that's really our secret sauce.
I wonder, so do you guys fundraise as like the whole fund together, since like there's so many different like universities, as you mentioned, like, since each university is like focusing on their own like community within their, I guess, like different school ecosystem, would that be like running as a group, or like is like each individual funds that have to function like as sort of like a franchise model?
Yeah, it's more like that in a way. I mean, we're all one organization. I mean, I sit here in our Boston office. I'm currently on the seed fund, but I used to be on the Yard Harvard fund team. But we sit with the folks who lead our Dartmouth fund, our MIT fund, our Yale fund, our Princeton fund. They're here, so they're all our colleagues. We all work together, but we each do our own independent fundraise. So if you were to join our Harvard fund and our Princeton fund and our Texas fund, you would get 3 unique portfolios. It's possible you may have a couple of deals that overlap between them, but the majority of the portfolio will be unique and different from the other portfolios. So we have different teams sourcing different deals. We don't require that every deal needs to have a founder who came from that community. I would say you might have some overrepresentation because we try to embed ourselves in the ecosystems of the schools as much as we can. We're not officially part of the schools, but we like to attend events and just be part of the entrepreneurial ecosystem of these schools. So you may have some of that. Some more, if you're in the Princeton fund, you may get more Princeton deals than if you're in the Yale fund, but we're trying to get into the best venture deals we can, period. And that's really the strategy. But we have individual teams. There's about 40 of us who are investors across 5 different offices around the country, supported by about 80 or 90 other folks, in all the other support functions that we have here. So yes, it's lots of different unique funds, and each fund has an annual vintage. So we raise a new fund every year for each one of these funds that we operate.
Totally. I wonder, so since you mentioned like you guys co-invest with a lot of like these name brands, I feel like living in Silicon Valley, there's a lot of people have their own like angel syndicate programs, and like a lot of people say that they would invest with like all these top name brands, but I feel like in reality getting into the deals to like these competitive rounds could be difficult. What would be like your strategy to kind of co-invest with the tier 1 fund, since like there's also like a question in the back of people's mind, like if as a like retail investor or like as an individual investor I can get into blah 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 company, that means like blah 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 company is not competitive enough, blah blah blah. So like people would have that kind of argument. Like, I guess, how would you kind of like see the like how do you position yourself in the position to both getting an attractive company from these top funds, as well as like explaining this to like the individual investors?
Yeah, that's really the challenge of what we do. We are trying to be the most impactful co-investor there is. So we're not competitive. We don't try to compete or try to elbow other investors out of the way. We understand that there's a role for the lead investor. They're going to take the board seat. We're not, and that's okay with us. And we try to complement what they do. So we might not be the ones sitting in the boardroom making strategic high-level decisions, but we can be supportive in many other ways. We have a platform team run out of our New York office that we call CEO Services that's here to basically support our founders with warm introductions, with expertise. We let them use our office space. We host events. We create and distribute content on their behalf. All kinds of things that we do to be an impactful co-investor that doesn't get in the way of what a lead investor is doing. So we really try to, form a relationship with the founders and start building with the founders themselves to show, hey, understand you're raising a $10 million Series A, $6 million is going to the lead. You might have $2 million for insiders and $2 million left for additional new investors that can add strategic value. We think we can do that. We're not going to be a huge check. If there's an opportunity to write a big check and there's mutual agreement, we could potentially flex up to multi-million-dollar checks. So we're not just tiny checks either. But there's kind of a range. We try to be flexible. We try to be an easy partner, but try to bring a lot of value. And we try to cultivate that reputation among other investors too. Of course, we network with other VCs, and a lot of our deal flow comes on referral from some of these lead investors and fellow co-investors. And we also try to share deals that we find interesting. Hey, this is a company we like, but we're not a lead. Maybe you'd like to lead. So kind of works both ways. We just try to be a friendly partner, not get in anyone's way, and here to be supportive. And that model seems to be working. I think it's also working for our investors. This year, we were ranked by CB Insights as one of the top 20 VC firms in the country, which I think speaks well that our model of co-investing alongside the top VCs allows us to get the kind of returns and deal access and into those great deals that's kind of unique and something different that an individual investor would have an extremely hard time doing on their own, let alone having enough capital to get into these later stage rounds, but just having the access and knowing where the hot deals are happening. I sometimes say, that we're kind of like this old quote from Groucho Marx where he said, I wouldn't want to be a member of any club that would have someone like me as a member. We don't necessarily want to be in every deal that comes our way. We want to be able to kind of fight our way into the best possible deals. And I sort of feel like that's what we get paid to do here.
I feel like in Silicon Valley, so a lot of the founders I have spoken with, they typically want the angel or the non-lead investor to contribute a lot of unique expertise. I wonder what would you say would be Alumni Ventures unique expertise and as a value add besides being non-competitive to these other investors. What would you say would be the major selling point to the most competitive founders who are who have the access to a Sequoia or something to decide between if you would go with this venture fund versus the other venture fund?
Yeah. I think we're a team of generalists as investors. I do everything from consumer to enterprise SaaS to hardware to biotech. I can't be an expert in everything. But
another piggyback question is I know something you said really interesting was in the other podcast was you guys are sector agnostic, and I feel for the LPs in Silicon Valley, typically they would want to see something very sector specific, especially I feel a lot of the investors who invest in other people's fund, they're looking at even more niche sectors. So the generalist fund are in Silicon Valley in particular, I feel it's having a harder time to raise no matter how big your fund size. Also the stage agnostic part is kind of I feel in Silicon Valley, typically people focus on very specific stages. And I wonder when it comes to convincing the LPs in the ecosystem, what would be their what's their mindset to for example, understand the terms that you're setting about the different sector or generalistic approach.
Yeah. So I think it's two questions on, how do we sell ourselves to LPs and how do we sell ourselves to, the companies and, and so both interesting questions. We are, we have many funds under one umbrella, right? So we've done enough deals in everything that I think we've seen a lot. We have 1,300 portfolio companies in our 9 or 10 years of existence. I mean, that's a pretty active pace. So we've invested pretty much across industries. So it's not to say we are ignorant about everything. It's just that we don't necessarily focus. That being said, for an investor that wants to focus, we do offer a number of what we call focused funds, such as our deep tech, our AI, our blockchain, women's fund, which is women founders, a global fund if you want international diversification, and a seed fund if you really like the early stages, which is what I do. So there are ways of specializing. We think there's value, however, in a broad-based portfolio because of kind of the power law, and lots of bets will lead to a couple, rocket ships. Hopefully, is kind of the idea. And because we're dealing with individual investors, it's a little bit different, I think, from dealing with institutional LPs, because I think a lot of our investors don't really have a lot of VC in their portfolio, and may not have a specific thesis. This isn't necessarily their day job. They want us to do the work for them, and we think a well-diversified portfolio is the best way to, account for ebbs and flows in different markets, and some years one thing is in favor, the next year something else is in favor. And, this is a long-term investment. It's kind of a 10-year fund that we run. And so we think a broad-based investment approach works well, particularly for our investors. But for the more sophisticated investors that do want something that's AI focused or healthcare focused, we offer that as well. We may not cover every single sector. We don't have a travel tech fund per se, but for a lot of the major sectors, we do have coverage. And I mean, I think to your other question about where we add the most value, I think it's really through our community, because we are so connected with these different alumni communities of many top universities. We have about 600,000 people that are opted into our network, that get our newsletters and follow us on social media. A lot of folks, most of these have given us some information about them, where they work, what their title is. We can do outreach to a lot of people as experts, as potential partners for our portfolio companies. And our platform team makes introductions every day between founders who are looking to connect with other entrepreneurs or executives and talk about their businesses. And we help facilitate that. And I think the scale at which we do that is quite extraordinary.
I wonder in terms of like building a platform, because I feel like what I thought was really fascinating was since like I feel like Alumni Venture is kind of also a company, since like you guys are very collaborative with each other as well. And I wonder, like, so since regular VC fund, they may have like a operating company that's like taking the management fee and stuff, like is Alumni Ventures functioning as separately from different funds? Or like, for example, in a traditional sense, like a fund would have like 2% management fee over like 10 years, and like that's like a 2% of management fee every year for 10 years. And I wonder if this is a similar case. I mean, you don't have to share if this is like non-public information, but just getting a general sense of like how the operating company kind of function as whole, since like there's different separate funds, and then since you guys are sharing the same operational partners on the operational side, just wonder how does it work as like a general like overall
Sure.
of view. Yeah.
Yeah, so Alumni Ventures is one organization. We have lots of funds under one umbrella. That's kind of why I like the parallel to kind of a mutual fund family, which may not be the right legal definition, but it's just a way to help frame the idea that you have multiple different funds. Like Fidelity operates probably hundreds of different funds. They're all unique from one another, but it's all the same company, and all the employees work together and collaborate and share back office, accounting and communications and legal and all the other functions. So that's kind of like how we do it. The model is similar. It's a 2 and 20 model. The difference is we collect the 2% over 10 years all up front. because this is, we're collecting in small checks, so it doesn't really make sense, I think, for either of us to kind of do capital calls on a 25 or 50K investment. So we do collect it all up front. We deploy most of that capital within the first year, probably 70 to 80% of it, and then hold the remaining in reserves, and that will get deployed over the next couple of years into follow-on opportunities. But essentially the economic structure is similar in that sense, aside from the fact that we collect the capital up front. And that's kind of what makes it all work. So yeah, kind of following the industry on that.
Totally. I wonder. Oh, hi, Drew. We'll address your question at the end. So I'm sure Ron is open for new companies, but I don't think that's a like. Yeah, I'm sure you're comfortable addressing at the end. But anyway, so I wonder when it comes to like managing the fund. I don't know how big your team is because I know that for each school they have like its own kind of set different kind of like set of investors. And I wonder how does since you're running the seed fund for Alignment Ventures, like how does your fund structure? And then since it sounds like a lot of the sourcing would be coming from a co-investors or like you're chasing down like some really popular deals or something, I assume since like I feel like the inbound deals typically varies as in general, there's just like a lot of information coming in. I'm sure like you're getting thousands of deal every year. And I wonder what's your day to day like running your fund as like, the non-lead investor, like what would be your strategy to like go after a certain deal or
Sure.
like what's the evaluation process, I guess?
Yeah. So as I mentioned, we're a high velocity co-investor.
Mhm.
So we need to look at a lot of deals to be able to do 60 deals this year, just from our fund. And we're a team of 3 full-time. We do have 2 summer interns helping out. But we're really 3 full-time investors. We are supported, of course, by a large organization behind us for all of the various support functions. But really on the front lines, sourcing and evaluating deals, it's kind of 3 of us. 2 of us sit here in Boston, and 1 sits in Menlo Park in the Valley. And the deals come from all different places. Some of it comes from our direct network, from other founders we've invested in or that we've connected with in the past who refer other founders. Some of it comes from other VCs. We also have something called the Super Angel Partner Program, where we work with experienced, highly successful angel investors, many of whom are focused on specific sectors with deep knowledge and expertise, and they refer deals that they themselves are personally investing in. And we did something like 35 deals last year alone that just came from our super angel partners. So that's been a great source to get referrals and tapped into things that we might not have otherwise seen. We do proactive outreach, of course, too. Companies catch our eye. We comb through PitchBook and other sources to find other deals. I would encourage, if there are founders that want to reach out, to Drew's question, you're more than welcome. What I would say, what would be most helpful is if you reach out once you have a term sheet, because we're not going to be able to really give you an answer until we know how the round is structured, who is leading, what the terms are. There's a lot of great ideas out there. We're generalists. I may not have a strong opinion or any firm conviction kind of off the bat on your idea. I'm sure you'll pitch it very well, and I'll think it's a great idea. But until there's a term sheet, we won't be able to make any kind of commitment. So if you do have that, feel free to reach out and then we can start talking. But at that point, we move very quickly. So we have a formula, we have a scorecard method that we use to evaluate deals that takes a look at not just who is leading the round in the terms, but what the addressable market size is, what kind of competitive moats they either have now or are expecting to build, what kind of founder market fit there is. I love founders that either have very deep knowledge of their space or are repeat founders in particular. But it's a whole combination of things. It's not always one thing over another. It's sometimes the whole picture. You bring it together, we score it, and if it kind of hits a certain level, we say this passes. And sometimes we write a small flyer check, like in a pre-seed round. We might not be ready to write a big high conviction check yet, but we might do 30K, which is at least we're on the cap table and we get to show you how our CEO services works and we can be helpful. But if it's maybe a late seed round, we might talk about a bigger check if there are customers and revenue and great traction. And our team has written checks of over $1 million as well. So there's a big range on what we can do even at the seed stage. So it just kind of depends, and but we're very open-minded in terms of sector, as long as it's a highly scalable, technology-driven business.
I wonder when it comes to portfolio construction, since you mentioned like you would save a little bit for reserve, let's call it like 70% you would invest in the first year of the 60 deals. And then you maybe save a little bit for reserve. And then since you are leading the seed fund, so assuming everything that you invest are in the seed stage, you mentioned like the super angel program. So like number one, how do you select who is in the super angel program, and what kind of criteria they have to kind of hit, and for them to share a deal with you, like what would be your way to kind of like keeping in touch with these angels, since I feel like if they are like a person who have invested in Uber when Uber was like a seed, like, or pre-seed stage, or like since they're angel investing, so as an angel they invest in like a really famous company, there's probably all these top funds are like trying to get them as a scout, or like trying to work with them. And how do you kind of like maintain the relationship with these super angels?
Yeah, great question. So we only started developing this program about 1.5 years ago. So it was a little bit of an experiment to see if it would help us tap into interesting deals that we might not otherwise see. And it kind of said, well, we want the same skin in the game. So we want the deals that they themselves have vetted. So it's important for us to, first of all, select the right super angels. And I think we're doing a good job of that. We can always do more. We're open to having more super angel partners, but some of them are people from our network that we know have great expertise, and we know they're actively angel investing. Some get referred to us. Some I've reached out to. I've read about them. I know that they're actively angel investing, and I've reached out and they've responded. But the way they to your point, I would say probably half of them are motivated just by being helpful to their portfolio companies. It's great to get this VC Alumni Ventures investing early, and it's helpful. They understand our value proposition, and they want to help the company raise more money and just be a supportive partner. And then others are actually motivated by something else that we offer, which is we actually share our carry with our super angel partners. And this is kind of to your question, what can we offer to help retain them? That we'll actually share some points of carry with them on our current investment, and even if we do a follow-on later, we'll share carry as well, because if they've helped us get into a deal that we otherwise would not have known about, that's worth something to us, and we'll compensate them for it. And it will be compensation in the form of, this was a successful investment, therefore we'll both get rewarded in the end. It might take 5, 7, or 10 years, but eventually we'll if it goes well, you'll get a prize for that. If not, then so be it. That's the way things go. But that's how we do that.
Totally. I wonder, so since like we chat about like, you are running you were with the Yard Venture, which is like the Harvard focused fund. And I wonder, like, for the people who are on your team, you mentioned 3 people. I don't know if you were talking about seed fund, or were you talking about?
Yeah, that's the current seed fund.
Oh, okay.
Yeah. The Yard Fund now is separate. I used to be with the Yard Fund, but I switched to seed internally. Yeah.
Okay. So for seed fund, assuming this is like more school agnostic, so assuming the 3 people are coming from different schools, since it's called Alumni Venture, so that's why I'm like, we're talking about schools right now. But since like assuming they're coming from like different schools or different network, and to raise a seed fund, like would it be having the same approach as like a school specific fund? Since like, I'm sure, I feel like the Harvard people may invest in the Harvard fund, or Yale people invest in a Yale fund. How does a seed fund like kind of like play out in terms of finding LPs? And then do you guys have like institutional LPs at all, or like it's like 100% just like people in like different companies, or like different other people in different like just like individual investors?
Yeah. So to the first question, we have a pretty good marketing and communications team. We do a lot of content marketing, a lot of outreach to what we perceive to be potentially accredited investors. So we use LinkedIn and other social media, and we've even done some print and,
I have a question on that.
Yeah.
So like for marketing, I heard, so like what would be the marketing way that's actually like feasible as like, like technically you can marketing to non-accredited investors, and then the investor people are marketing to typically have to be the people that you have a relationship with. But technically I feel like to acquire LPs, like you can't have relationship with every person that's in the like, who are like a credit investor. How do you guys kind of like navigate that kind of situation?
Yeah, so just imagine that we put information out there. Now we
Mhm,
sometimes we pay for the space to get the access to
mhm,
LinkedIn, and but we use a variety of methods. But we put the information out there that this is who we are, this is what we do. If you'd like more information, you can come attend our webinar. You can add your email, and if you sign up, with one of our sign up pages, we'll ask you, are you accredited? This is the SEC definition of an accredited investor, and you
mhm.
have to certify, yes, I'm an accredited investor. And then, we can send you more information. And then if you're interested, you can sign up for a call with one of our senior partners, and get more information and engage in a discussion. So yeah, I mean, essentially they have to we put the information out there, and then they have to come to us, say, I'd like to learn more about this. And then we can provide all the information they need. So that's the way we do it. With the seed fund, we don't use alumni network specifically. There's a lot of crossover. There are people that come and invest. I personally invest in our seed fund as well as our Yard Ventures fund, as well as our health tech fund. Many people invest in multiple funds, so we market within our existing community. And then outside the community, same thing. We do a lot of content, so we do webinars at least once a month on a topic related to seed venture, sometimes with different guest panelists, founders, or others. We have one coming up on venture investing in the heartland, for example, coming up in a couple of weeks, with some great panelists. And then people will kind of sign up for that, and then we they'll opt in and then get our marketing and get more information if they're interested to learn more about investing with us. So they have to kind of come to us, in a way, once we've kind of put ourselves out there as this is who we are. So that's kind of how that works. I think there was another part of your question.
Totally. Oh, I was just talking about like team building. So since like you have like 3 people on your team, are they
Mm,
like, since like for each alumni group, assuming they're from the alumni network, but since like seed stage fund, that's like a more on the general sense, from like the community perspective, and how do you kind of like pick your team member, and how do they kind of like work with their local um, investors to like build up their kind of, since like it's 60 deals and then each
yeah.
person assuming have to contribute like a 20 or something. How does that work for to like build like a successful team?
Yeah, I mean, for my team, I've got a senior colleague in our Menlo Park office. Her name is Mira. She's a Dartmouth Tuck alum, but it doesn't necessarily mean we're going to source or do much for. We also have a separate Dartmouth fund with its own team of Dartmouth PL alumni, kind of running that. So I think the alumni connections can potentially be helpful for our seed, deal sourcing, because we've built our own networks. I went to HBS, and I also went to Babson, as did the associate on our team who's here in Boston. And so sometimes we can tap those networks, but I think more of what we do is just, hardcore networking, both in person and virtual, and kind of getting out there, putting ourselves out there, generating content, trying to just be present in the venture ecosystem to hopefully, find deals, get tapped in, network with the right people, and just kind of grind to find the best deals, because we need to look at a lot of deals to get to 60. We need to be evaluating hundreds, if not over 1,000 every year,
Mhm.
just to get to the 60 that we'll end up doing.
So
Yeah.
for the investment selection criteria, so you mentioned like you would invest in like up to like a couple $1 million and stuff. How do you like are you sensitive on the valuation, or like, what's your thought process on portfolio construction? Do you invest the same amount for like 2 into 60 deals, or do you have like a valuation cutoff line? Like, let's say if some of the AI company are having a bizarre valuation called like 55 million at a stage or something, what would you think that's like not doable for you guys? Or like from an investment portfolio construction perspective, what's your thought process around that?
So for portfolio construction, we try to, even within the seed fund, have a very diversified portfolio, not overweight in healthcare or fintech or even AI. I mean, we want to cover the bases of what the venture ecosystem is covering broadly. What are the top VCs investing in, this year? And we want it to be somewhat reflective of that. We have some targets. We're not totally beholden to them, but we will be careful not to overweight in any one specific sector or have companies that are doing essentially the same thing. But other than that, the initial investment size out of this fund will actually be pretty much uniform across the board. So the way we can do 30,000 into some deals and maybe $1 million into others is we can sometimes tap other sources of capital within Alumni Ventures. We have lots of different funds, and sometimes it can be spread around. We also run syndications. So this typically happens if we're going to write a bigger check out of the seed fund. It actually, the money doesn't all come directly from the seed fund itself. This is a little bit more, though, on how the sausage is made here at Alumni Ventures than being particularly relevant, to know that one company is going to be 3 times more than another company. But we do syndications where probably about once a week or so, we'll share a deal where we get enough allocation to share it with a subset of our investor group who might want to put money into a specific opportunity. You have to be an investor in one of our funds to get access to those deals, but we do run those as well, and sometimes that helps us get to a bigger check size. But pretty much all of the deals will be around 30K, give or take 5 or 10K. But then we will write bigger checks because of other sources of capital that we have internally.
Do you, in terms of just selecting the different deals, or you mentioned the 35 deals are from different angels, were they just 1 or 2 really big angel in a portfolio, like a particular sector, or since you guys are journalists, is there 1 or 2 angel that are contributing to a majority of the deals, or how do you select the angel investor to work with? Are they coming from a list of Business Insider top 75 angels, or are they from what's the criteria that you are selecting them? Because I feel by the time that you can see this angel have amazing portfolio, they typically already went over the era of selecting the good company in that batch. As for example, let's say you invest in a Uber that's literally 10 years ago, and now there's a different batch of founders that with a different age range and different I guess different thought process, compared to the angels who have selected a very obvious top deals. How do you kind of evaluate if an angel can select the good deals, or are they just measured by if they're investing in a particular are they investing in the company that later will be followed on by a certain investors? How do you select these angels?
Yeah, there's a diverse range of backgrounds. We have a few that are a little bit on the younger side. Usually those are folks who founded and exited a company are now able to be, so some of it's okay, you can see that they've been a successful operator, and they usually have expertise and interest in 1 or 2 specific areas. We have others that are retired, they're angel investing for fun. They've made their money in life, but they've been around and they've done dozens, if not hundreds, of angel investments over the course of their life or last 20 years or whatever it might be. And you can kind of talk about, well, what have been some of your hits and misses, and try to understand that. It's very hard to get really detailed analytics on this. If anyone has compiled analytics on angel investing success, I would gladly pay for something like that. So there is a little bit of judgment, but you also, by talking to people, you kind of understand how they see certain industries, what kind of companies they've invested in over the years. It will take, of course, as this business takes usually 7 to 10 years or more to see an exit. It'll take a while to kind of know how well the deals they refer to us will actually do. But you kind of go on their track record as operators, as investors, and say, okay, I think this qualifies. But worst case scenario, some of the super angels have shown us some deals, but we haven't pulled the trigger because it didn't quite fit our criteria. So we also have the Alumni Ventures criteria of what we want to invest in, and sometimes it doesn't hit the mark, and that's fine, and other times it will, and say, this is a deal we would have done anyway. Thank you for sharing, because your network helped us tap into this deal that we might not have seen. So I think we still always fall back on our own scorecard and the way we evaluate deals, and the super angel is a way of kind of vetting and sourcing deals we wouldn't have otherwise seen, but it's not like an automatic that you refer and then we do it. So, I mean, to give you the range, there are some super angels that we've had for over a year who haven't referred any deals that we've done yet, and there are others that have done probably between 5 and 10. So there are some who are quite active and prolific, and others that might do like 1 or 2 a year, and maybe it will fit for us, maybe not. But we're open to different backgrounds and profiles for this.
I wonder when it comes to like explaining this to like individual investors. I think like Mike said this on his podcast. It was like the ideal clients for Alumni Ventures, maybe like think like a dentist from like Ohio or something. So I wonder when like these people in like who is outside of Silicon Valley or who is may not be like very familiar with venture in general, like maybe they have a different risk tolerance than like a lot of the Silicon Valley investors, as people are more aware of like, if a deal goes south, like, your money may be gone. So I wonder like what's I guess like have there been like any challenges to explain these kind of venture mentality to like the potential audience? And then what would be the question that you're getting from like these people who are like very successful on its own but may not be like super familiar with like how the venture scene works in general?
Yeah, indeed. Quite a bit of our client base are individuals who've never invested in VC before. Many have never done angel investing either. We have some who are very sophisticated, who understand our model and think it's unique and differentiated, and something that they will do too. I mean, we have investors in our group who have their own VC funds, but they think that we bring something different to the table that they themselves don't do in their own fund. So we have the whole range of level of sophistication and experience with this type of asset class. So yeah, there is an education component, and that's why we churn out, every week we're probably churning out a couple different webinars that have to do with tech or innovation or venture investing, and we run these master classes on what does it mean to invest in a seed deal or a Series A or a later stage growth deal, and what is the risk profile at these different stages. So there's a lot of education involved, and it's also one-on-one. Sometimes we or I or my colleagues will get on the phone with investors who have specific questions, and if they have concerns, we try to allay them that, this is based on a foundation of many years of experience of our team who've been doing investing for a long, long time. But ultimately, this isn't about making a quick buck. This isn't something you should put your entire portfolio into. I mean, usually alternative assets are, some percentage of your portfolio that you should figure out maybe with a financial advisor or whomever, to try and figure out what that should be. But it's a higher risk asset class. And two, it's an illiquid asset class until companies, have an exit of some kind. And those exits could be negative exits. And, what questions do we get? I mean, sometimes we see the negative events happening in the earlier years and the big positive events happen in the later years. So it takes a little bit of intestinal fortitude, I guess you could say, to, bear with the ups and downs and market fluctuations and, all of that, to know that what you're really looking at are big winners that will probably come in years 7, 8, 9, 10. And that's when you really see that the big winners finally kind of emerge. So there's a little bit of hand-holding, but that's our job. That's what we're here for. We are trying to help democratize the asset class and make it available to others who may never have considered, like Mike often refers to the heart surgeon in Des Moines.
Sorry. Why did I think it's a dentist from?
No, I mean, it's the same idea. It could be a dentist, a lawyer, a heart surgeon, and who knows, anything, right? But it's really, we're really here to help, investors understand that there are opportunities to potentially outperform the stock market. Nothing's guaranteed, but that's kind of our aim. That's why you would invest in an alternative asset, because it's, you hope to get something a little bit more. And based on historical results, that, that could very well happen. That's the goal, but it's not guaranteed. We never know that any individual vintage that we create is going to outperform any other index, even within venture capital. Every portfolio is unique and could be driven by, a portfolio of 25 companies, and it could be one company that returns the entire portfolio. You just never know what's going to happen. And as we've seen over the last couple of years, there have been companies that were, multi-billion-dollar unicorns that suddenly went to nothing. And Similarly, there are companies that seem to be quiet for a long, long time, and then all of a sudden there's $1 billion exit, and you weren't even expecting it. So this is a business that takes a little bit of risk tolerance and understanding that this is different from a stock market where you can kind of come in and out every day and keep an eye on the stock price minute by minute. This is something different from that.
Totally. Okay, so at the end, I want to just talk about your book, about like purpose-driven investing. Why don't we talk around? Do you want to share a little bit more about your blog, and then that turned into a wonderful book about like 50 portfolio companies? And now, yeah, I'm not sure if they're all your portfolio companies, but I know some of the portfolio companies. But
right, yeah, appreciate it. Yeah, I started a blog in early 2022, I believe. Basically, I became a venture investor, a little over 5 years ago now. And what I really discovered is that I enjoy investing in companies that are actually making a difference in the world, that I think are solving some kind of societal problem. And what interested me particularly are companies that are solving problems.
I just opened your Substack, and then it started playing your interview with the TripAdvisor founder. But okay, please keep going. Sorry.
Oh, okay, no worries. I didn't hear it.
I was trying to put the blog into the chat, and then I realized I can't put because we're on live. But keep going. Sorry.
Oh, okay. Well, my blog is ronlevin.substack.com, and my book website is higherpurposevc.com. But in any case, so I started writing about companies initially that I had invested in that were solving problems that relate to the causes and symptoms of social and wealth inequality, which I think is one of the biggest societal challenges, or climate change is one of our existential issues. But I sort of felt like inequality was just an issue that I wanted to kind of bring together and say, well, how do you solve it from an education standpoint, from a job creation standpoint, from a health and wellness standpoint, from a financial democratizing, financial access, credit, capital, all of that perspective, and solving for disability, like a lot of different aspects of inequality that I saw venture-backed companies tackling. And so I wanted to profile the founders by initially writing blogs. At first, it was a few companies I'd invested in, and then I soon expanded it to companies that I'd not invested in. Bless you. And then at one point I decided to compile this into a book to create a narrative, basically in which I hope to encourage not just entrepreneurs to go out and solve big problems and say that there are venture dollars that are willing to back them, but also to kind of encourage us as investors, as a reminder that we've got a lot of power and privilege to be able to invest not only our own money but other people's money, and to use that power essentially to create great companies. There's not just correlation, there's causation. By putting in money, we give founders the opportunity to create great companies. And I use the book Higher Purpose Venture Capital, available on Amazon and elsewhere, to just share some of these stories that I think are so inspiring, that we can use our money, and maybe other people will be interested in other issues. And I'm not here to judge what you find to be a societal need, but I would argue most people would think longevity, our ability to live longer, healthier lives, could be one. Education for our children could be one that I think hopefully most of us could agree on is an important issue. So I'm not going to judge what everyone's interest is in particular, but it's just to encourage to say, hey, there are some problems that are bigger in the world, and even if I personally don't face the challenge of not knowing where my next meal is going to come from, there are millions of people out there that do face these challenges every day, but there are clever entrepreneurs that are going about trying to solve these problems. And the way we're going to scale these solutions is through investing as angels, as venture investors. So I hope the book will be a little bit of inspiration for people, and to share some of my views on that.
Amazing. Okay, so we're at the last part of the interview. We have a 1 minute fire round for you. What's your favorite book beside your book, obviously? But...
Oh gosh, that's a tough one. Favorite book. Well, as a novel, I really believe in justice, and I actually don't read a lot of novels, but if there's one, I would say The Count of Monte Cristo is, to me, the greatest story of justice. And I'm a strong believer in social justice.
Who made the biggest impact in your career?
I mean, ultimately, I have to go back to my mom, who cultivated, she unfortunately passed away, which is a large part of why I moved back home to Boston and left TravelPerk. But she was an entrepreneur, a business owner, and always, encouraged me and cultivated my early entrepreneurial interest. I started my first business when I was 11 years old, and I couldn't have done that without her support. So, there are a lot of people along my professional career path that I've worked with that have inspired me, but ultimately, I have to think about my mom first.
Who would you invite to your dinner party?
Oh boy. Yeah, I mean, I would say there are people that really inspire me these days. And if I pivoted a little bit right now, the issue in the world that is troubling me the most is the war in Ukraine. My wife is Ukrainian. I've been there multiple times. I'm very concerned about what the potential ramifications are if Putin gets his way. I would want to sit down with kind of any world leader that has the power to influence the outcome of this war, be it President of the United States to head of NATO to the new Prime Minister of the UK, because I think there's so much more that the West can be doing to save lives of Ukrainians. And we saw today a children's hospital in Kiev got bombed by Russia. How can the world sit by and watch these things happen? I think there's a lot more we can do. And I would like to sit down and have a conversation with someone who would have some influence to actually do something.
Wow. Well, at the end,
I don't mean to end it on that sour note, but I do think it's an important topic. And Ukraine has fallen a little bit out of the headlines. And I think that's a shame. And I think people need to realize what's going on there.
It's definitely a very important topic across the globe, and we have question on the lighter side, which is where can we find you outside of work?
Sure. Let's bring it back a little more positive to end it. But yeah, I'm obviously on LinkedIn. Feel free to reach out. My book is at higherpurposevc.com if you want to read a little bit more about what the book is. I used to call it the Higher Purpose Venture Capital blog. I now call it the Higher Purpose Smorgasbord because I go into kind of some topics that aren't necessarily VC connected, but still somehow about improving the world. So I'm on Substack, ronlevin.substack.com. I publish a new blog or podcast once every 2 weeks. And yeah, those are the best ways to find me.
Awesome. Thank you so much, Ron, for coming on the show today.
Grace, it's been a real privilege. Thank you so much for having me.
Let me quickly answer.